All right, welcome back, everyone. Today we are going to talk about stocks, which is one of the most riskiest investments you can make, but also one of the most rewarding. So, firstly, what is a stock? A stock is basically a share of a company. Basically, this means that if you own a stock, you are owning part of the company that stock is for. Now, this may seem very cool and all, but when you also own a stock, this means that the stock price itself can go up or down, just as an item in the store can go up and down. However, unlike items in the store, which are usually quite fixed and stable, and you know that when you come back the next day, that same item will be of similar price, stocks are not in this way. Stocks change prices every minute, every second, every day, and they often go from really high to really low in a matter of seconds. This is why they're called high risk investments. If you make the right decisions and buy a stock when it's really low and sell it when it's really high, you can make lots of money off of it. But the opposite is also true. If you buy when really high and then sell when really low, you lose so much money as well. Now, the risks are even greater because you're not guaranteed to have a return on your investment. If you buy $100 worth of stocks, there's no guarantee that you will end up with $100. You could end up with nothing. You could also double your money, but there's that risk factor involved as well. Also, selling and buying stocks is a very complex process when making decisions as to when you should sell, when you should buy, and for which companies. And there's so much information out there, and often they're misleading and try and trick you into buying wrong stocks and making the wrong decisions. This way, it's always useful to have an expert in buying and selling stocks, such as an investment broker, to help you. But often using these people requires fees and commission, and so you're not really getting as much profit as you would if you were doing it yourself. But there's also less risk involved. Stocks are not usually recommended for people who are just starting out into finance because of this high risk. But if you want to continue buying stocks, here's how to make the most out of your investment. So, firstly, stocks, you make money out of stocks in two ways. The first way is the stock increases in value. Many factors affect this increase in value. Let's take, for example, Apple. If you buy a stock at Apple Inc., then and Apple releases a new product that does really well and sells really well, people are going to have more confidence in the company. The stock price will increase. The opposite is also true. If a company does poorly in profits or in their products, then the stock price will decrease. Also, the overall market is also affected by the stocks. If the overall market is at a downward trend and is seen as unconfident and going downhill, then most stock prices for most companies, regardless of what they release, will probably go down. The opposite is also true, and then the market can go up and you can see strong growth as well. Then, for company specific areas, there's news reports as well as certain investor sentiments and also company changeovers, layovers, mergers that all affect the stock in different ways depending on how confident people are in that company's ability to do well. That's the first way you make money, by buying low and then selling high. The second way you make money from a stock is by paying a dividend. Now, companies pay what is known as a dividend to all stockholders, and this is a share of their profits. And this is done usually every month or 4 times a year or once a year. Companies are never required to pay a dividend, and they can stop at any point. But usually companies pay a dividend to ensure that stockholders keep trusting it, that they're going to continue to do well, and that they have confidence in their own growth and their own company, and that is why they're rewarding you for placing that same trust in the company. This way, you can often see that companies that pay dividends are often the most stable companies on the market, and also ones you should first start to invest in when going for stocks. The final downside, however, to investing in stocks is they can often be expensive, especially stocks that are most stable. For example, stocks such as Apple or ExxonMobil, or stocks such as those that are very stable and pay out dividends, are often expensive at $100 per stock. Often cheaper stocks are more volatile, they fluctuate more easily, and can often result in bankruptcy, and then you won't get any of your money back at all. Some key types of advice are to hold a diversified stock portfolio. This means that you include stocks from all different types of companies in order so that if one company fails, the other companies can still make you money and make up for that loss. Also, invest for the long term. Generally, the economy moves up no matter what when you're looking at it for a period of 5 years or 10 years. So invest for the long term with these stable companies, then you will eventually make money. Don't try and time the market so that you make money for a short while and try to make gains on fluctuations in a day or even a month. Finally, get advice from a professional investor when you're first starting out in stocks. There's often so much to lose when first starting out and knowing nothing. And this is just an introductory information on stocks and is nowhere near the information you will need when first starting out to invest. So gain knowledge from a very professional investor and even have them guide you through buying or selling stocks and have them do it for you for the first few times before you know all the required information to buy them yourself. So I hope you learned something from that video about stocks. If you prefer a less volatile investment method that still returns your investment, be sure to check out the video on bonds as well. You need somewhere to store that money, so be sure to check out the checking and savings accounts down below as well. Thank you.